Hi students, in the last class we discussed the problem on the forfeiture of the shares as well as the ratio of the shares. Okay, so now see one more problem we will see on that because it's very important for your exam purpose. Okay, so just see the A company issued 5,000 equity shares of rupees 100 each at a discount of 10% allowed at the time of allotment. The net amount payable is as follows. Okay, so now see, so the A company is there and this company issuing 5,000 equity shares and each share price is rupees 100. Okay, each share price is rupees 100. For these equity shares there is a no demand in the market, so that's why the company is issuing. Issuing means what? Discount. Okay, so it means what? The 10% is giving discount on each shares. It means what? Now they are going to issue rupees 90 rupees per shares. Okay, so now see how they are going to collect this 90,000 rupees. Just see, by the application rupees 20, by on allotment rupees 20, the first call 25 and the final call 25. Okay, like this they are going to receive this 90 rupees. Okay, so actually the share price is rupees 100, but they are going to receive rupees 90 rupees. Okay, because 10% is given at the time of allotment. Okay, here should be 30, but they are given rupees 20 because 10% is given the discount. Okay, so now X holding 100 shares did not pay final call money. Okay, so it means what? Whatever the X holding, this is the company is receiving the shares. It means what? They are buying the shares. Okay, so out of these 5,000 shares they are also buying, but whatever the 100 shares is there, no. Okay, so that 100 shares they are not able to pay the final call rupees 25 for these 100 shares. Okay, so did not pay final call. Okay, so they did not pay rupees 25 each share of rupees 100 shares. Okay, so his shares were forfeited. Okay, so his shares were forfeited. It means for this 100 shares this company cancelled the rights of the shareholders for these 100 shares. Okay, so these shares were reissued to buy at rupees 70 per share, fully paid up. Okay, so it means whatever these 100 shares are remaining with this A company, again they are going to reissue to the buy persons. Okay, at rupees 70. Okay, actually share price is rupees 90, but now they are going to issue rupees 70. Okay, so pass the journal entries. Okay, so now you know the format. Okay, with the help of that format you have to pass the journal entries related to the application, related to the discount, or related to the premium, or related to the par. Okay, so now this problem is related to the discount and you know how to pass the journal entries related to the discount. Okay, so whatever the first transaction is there, by the application rupees 20,000 they are going to receive, just 5,000 shares are there. Now see, so bank account debit rupees 1 lakh, it means 20 into 5,000, it's a 1 lakh. To equity share application account credit rupees 1 lakh, being application money received on 5,000 shares at rupees 20 per shares. Okay, so now this 1 lakh they are going to transfer to share capital accounts. Okay, so what's the entry? Equity share application account debit rupees 1 lakh to equity share capital account credit rupees 1 lakh. Okay, so being application money transferred to share capital account. Okay, so next the third and the second was on allotment rupees 20. Okay, allotment rupees 20. Okay, so now what's related, that is related to the discount. Okay, and you know that. So equity share allotment account 5,000 shares at rupees 20 rupees debit, it's a 1 lakh. Discount on issue of shares account rupees 10. Okay, so the 5,000 into 10 debit, it's a 50,000. Okay, so to equity share capital account credit rupees 1 lakh 50,000. Okay, so out of this 1 lakh 50,000 only they are going to receive rupees 1 lakh, because this 50,000 is a loss. Okay, because discount is a given. Okay, so now see how they are going to receive. This is the bank account debit rupees 1 lakh to equity share allotment account credit rupees 1 lakh. Okay, so being allotment money received. Next, first call amount, first call rupees 25. Okay, so equity share first call account debit rupees 1 lakh 25,000 to equity share capital account rupees credit rupees 1 lakh 25,000. It means what? So this 25 into 5,000, it's a 1 lakh 25,000. So now this 1,25,000 they are going to receive. Okay, so now see, bank account debit to equity share first call account credit rupees 1,25,000. Okay, so being first call money received at 5,000 shares at rupees 25 per share. Okay, so now the entry related to the final call. Okay, and final call rupees 25,000. It's related to see what they told X holding 100 shares did not pay final call money. Okay, so now first of all see this 25 into 5,000 being equity share final call account debit rupees 1,25,000 to equity share capital account credit rupees 1,25,000. So being final call money due on 5,000 shares at rupees 25 per shares. Okay, so out of these 5,000 shares, 100 shares are did not pay the call, means 25 rupees per shares. Okay, so now these they are not going to receive this 1,25,000 because their 100 shares holders are not paid rupees 25 per share. Okay, so now how much they are going to receive, just here, bank account debit rupees 1,22,500 to equity share final call account credit rupees 1,22,500. Okay, so the final call money received on 4,900 shares at rupees 25 per share. Okay, so it means what? So there are, it should be the 5,000 shares, but here 4,900 shares, because for this 100 shares the X holder it's not paid final call. Okay, so that's why that's why the company is not receiving this. Okay, so up to this it is, I hope it is clear. Okay, so now related to the forfeiture of the shares. Okay, so equity share capital account 100 shares into rupees 100 debit, it's a 10,000 to discount on issue of shares account 100 into 10, it's a 1,000 to forfeited shares account 100 into 65, it's a 6,500. Okay, so to equity share final call account 100 into 25, it's a 2,500. It means what's the narration is what's being 100 shares forfeited for the non-payment of final call money at rupees 25 per shares. Okay, 25 per shares. Okay, so like this we have to pass the journal entries. So bank account debit, so it is a reissue, it's related to the reissue. Okay, so bank account debit rupees 7,000, it means 100 shares at reissue they are going to issue 70. Okay, so 7,000 forfeited shares account, it means what? This is the loss there. First of all, for this 100 shares there were the 100 rupees, but now it's the 70, so it is forfeited, it's a loss 30 rupees, it's loss. Okay, 100 into 30, it's a 3,000 to equity share capital account 100 into 100, it's a 10,000. Okay, so being reissue of 100 forfeited shares at rupees 70 per shares fully paid up. Okay, so now forfeited share account debit, it's a forfeited share account debit to debit 3,500 to capital reserve account credit rupees 3,500. Okay, so this is the forfeited shares 6,500 minus this forfeited ratio forfeited shares 3,000. Okay, 6,500 minus 3,000, it's remaining 3,500. Okay, so see here, being the balance in forfeited shares transferred to capital reserve account. Okay, so like this we have to solve the problems. And whatever I have taken the problems, okay, related to the par, related to the premium, related to the discount, as well as related to the forfeited of the shares or the reissue of the shares, all the transactions you have to note down in your notebook. Okay, so all of you watch this lecture and note down the problems in your book. Okay, so you will understand. If you not understand, you can contact me. Okay, so thank you.